Information shared on the following program is for general information purposes only. It does not constitute legal, tax, investment, or other advice, nor is it intended to recommend any particular investments, products, or financial instruments. Always seek advice from your financial advisor, attorney, or accountant with regard to investment, legal, or tax questions.
It's my money and I need it now!
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 I couldn't agree more! So let's get started.
Welcome to the only show in the country dedicated to helping savers worry less about money, the Worry-Free Retirement, with your host, nationally recognized retirement specialist and four-time author, Tony Walker.
In the 1996 hit movie, Jerry Maguire, Tom Cruise plays Jerry, who serves as a starving sports agent for an up-and-coming football star played by actor Sam Gooding. Frustrated by Jerry's lack of ability to land Gooding an NFL contract, his famous line is as follows, and he says this to Jerry to repeat, "Show me the money." It's a great one-liner for sure, and assuming you're a hard-working saver who is looking to use and enjoy your retirement savings before it's too late, you may be thinking the same thing. But with a little different twist in the play on words, you ready? Let's go back to that J.G. Wentworth ad. Let 'em roll there, Aaron.
It's my money and I need it now!
That's right, folks. While the financial world may be always telling you to show them your money, what we want for savers is to show you your money. That's right. Today we're going to be talking about why many of you are so frustrated that you can't get access to your own money and why we at Tony Walker Financial are heck bent on helping you get it. And with me in the studio today, helping us produce the show as usual, is America's favorite financial sidekick, Mr. Aaron Orander, who is not mic'd up at the time, but Aaron's going to be there for us because what I wanted to do in the studios with us is my favorite nephew all the way from Lexington, Kentucky, one of the fiduciaries that helps with a lot of the subject matter at hand today, and that's showing you your own money, Mr. Wes Walker. Good afternoon, Wes.
Good afternoon, Tony. How's it going?
Going good, and you're always good about this. I think you found out about 3 hours ago that you're going to be on a radio show today, and you never balk at it, so that's good.
Did do a couple vocal exercises to get warmed up for it, but yeah.
Actually, you sound a little more mellow.
They said from the stomach is where you're supposed to talk.
I didn't know if you were trying out for a part on NPR radio. You know those guys are always, hey, how's it going?
If anybody out there from NPR is listening, yeah, I'm open to it.
Okay. Well, we are happy to have you folks, and you are listening to the Worry-Free Retirement, and this is a huge, huge issue that I've seen in my past 38 years, and the reason I've got Wes in the studios today, we're going to talk a little bit about our process at Tony Walker Financial and some of the, I wouldn't want to say comical episodes we have, but some of the more interesting ways that we see people who are trying to move their money over to us, Wes, whether it's a 401k, IRA, brokerage account, and sometimes, not always, but sometimes the reaction of those current custodians of our clients who are trying to move the money over to us and how they seem heck bent on not wanting to give that money back. So you ready for this episode?
Let's do it.
All right. So we were going to have in the studio Lisa Potter. Lisa's out of our Bowling Green office and does a lot of our rollover and eligibility calls. Actually, we're going to have her through a Zoom call on our TV show, which incidentally, if you haven't seen the Worry-Free Retirement television show, you can go to our YouTube channel. So when you get to the YouTube channel, just go to Tony Walker Financial and you can call up past episodes. But with you being in the office today, Wes, because you do so many of these calls, if you would kind of set the stage, what happens? Somebody comes in, they meets with myself or you or Trey or Heather, the other fiduciaries maybe, and they say, okay, Tony, I want to move over this brokerage account. I want to roll over my 401k or transfer my IRA. So we take them through the onboarding process, and when in that call sometimes do you or Lisa Potter get involved?
Sure. So if somebody's ready to move forward and do business, they've established that they want to become a client of Tony Walker Financial, what we'll do at that point is take a look at their holdings that they've got in the accounts in question. So it might be a regular brokerage account, might be an IRA, Roth IRA, any number of accounts. we'll take a look at those holdings and first determine if to move them, we would incur any trade fees. So that's important. You might not realize if you move money over, sometimes you might incur trade fees that could be in the hundreds of dollars. So
let me stop there just a second. Yeah. That's an interesting point. So in other words, again, the theme is I want my money and I want it now. In other words, show me my money. Okay, Jerry Maguire, show me the money. This is show me my money from the client's perspective. So what Wes is describing, let's kind of focus on this. This is the first case in point. You go back to your current custodian, right, because you want to move the money out. They've been making money on your money, right?
Correct.
Whether fees, commissions, whatever. But then what you're saying, what happens is rather than just sending the money to you, which you're requesting, go over that again, these transaction fees. Where does all this come from?
Right. So they might have money in managed mutual funds or any number of investment products that if we were to roll over what's called in kind, meaning the funds stay the same when they come over to us, well, to get those into our portfolios, we might have to trade them and then reinvest them into our portfolios. From trading them, if these advisors are making money on these accounts, they might have some trade fees built into them. So in order to get from their portfolios to ours, they might incur some trade fees. So as a segue to that, what we do to get rid of these trade fees, just as a courtesy to new clients, is we'll call the institution that the money's at and request that they trade the account to cash on their end. That way we circumvent the trade fees, we can roll over just the normal cash, and from that point invest it into one of our 3 portfolios.
And we'll come back to that. So that's one way that we contact custodians for people to try to get your money back, to show you your own money. Describe the 401k rollover process. Now, I know you don't do as many of these, Wes, but now somebody's got a 401k.
Sure.
And we call the custodian, whoever it is, Mutual of Nairobi or whatever. That usually is not as big a deal, but kind of go through that a little bit. And also, I know I did a 401k rollover the other day. Everybody was tied up. The amount of different hoops and paperwork, it was astounding the number of things we had to do just to get that. So address the 401k rollover now and how hard it is to get that money back.
Well, we ran into that last week on the rollover call that you did. Didn't they require a spousal consent signature? Consent signature?
Yeah, on a 401k. I never heard of that.
Which is an individual retirement account. That's not a joint account,
correct,
but they still required it. So what they'll do, these institutions, they're trying to put hoops to jump through in order to keep you from rolling out the 401k. Maybe you'll just get frustrated on the phone and say, I'm not going to do it because I don't want to have to go through all this stuff, because they want to retain those assets. That's the goal. In all of these rollover calls and eligibility calls, they're going to try and retain those assets because they're making, in most cases, recurring fees on the money that they manage. So they are pretty hesitant to let any of that money slip away into any other firms.
So a lot of times, I know I've had 2 appointments today as we record this show on June 13th, 2022, and a couple of people have wanted to move forward, but they've on their own said, well, I'll just call the custodian and I'll find out what's going on with that. What would be your suggestion on that, Wes?
Well, if you call the current custodian, you're going to probably talk to someone who's labeled as your advisor. You might have worked with them in the past, you might not have. They might have just been assigned to your case, but they're going to play goalie. They're going to try and get that money to not let us shoot the puck into the net and move the money over. They're going to try and stop you from doing that, give you every reason in the world why you shouldn't move money and why their services are going to be better to you. So I would just be forewarned that those people, their ultimate goal is to try and retain the assets that they've got with you. So I would definitely come with somebody who's prepared to actually make the money move over on the line with you.
And again, as a courtesy, we make those calls. We've done hundreds and hundreds of them. So folks, if that's you right now, we call these eligibility calls. Maybe you're sitting there, you're over the age of 59 and a half. Maybe this market's got you spooked. You're just trying to think of what to do. If you want us to make a phone call to your current 401k or custodian just to see what's involved to move the money over to us, not saying you should move it. We're just saying just so you can understand the process, we are happy to do that. And all you got to do is go to TonyWalkerFinancial.com, TonyWalkerFinancial.com, click on the Let's Get Started, and you want to call this an eligibility call. Just say in there, put somewhere in the comments, I want to make an eligibility call with my custodian. What we'll do then is call you at your phone number, make sure we have the correct phone number of the custodian. We need that from you. And we'll just call and basically just say, hey, custodian, can they move it over? Is there a charge? What's the best way to do this? And we'll handle all of that. Now, and let me say this too. Most custodians don't give you a rough time. However, every once in a while, share, we don't have to go into a lot of detail, Wes, but share with the call you had on a client and this particular broker who was really fighting and scrapping to keep that account.
Yeah, so like we said, they are trying to retain those assets that they've got under management. So it's going to be somewhat contentious. You know that sometimes going into calls that it might be a little feisty. Normally they're okay just moving money out. And of course, any money that moves out of our firm, we're the same way. We're very
accommodating.
Very accommodating. Ready to, if you do want to do business with anyone else or you just want to take the money out to spend and enjoy, we're not going to give you any hang-ups about taking money out from us.
Yeah.
But give a call a few weeks ago to a certain broker, we won't say who, but really was scratching and clawing to get that money back. And I think it slipped from somewhere that they were putting money into an annuity. Well, so they started questioning our firm on our capabilities with annuities and our understanding of annuities. And of course, we've got enough firepower to come back at that with lots of facts. So ultimately, the person on the other end of the phone didn't even really understand annuities, the process. And so rather than just arguing with them, basically what I said is, assuming client X, if you're ready to move forward, would you like to go on and process it? They said, yes, we would, and that was kind of the end of the conversation. So I think you just really need somebody who's trained in this world to help out on these sort of phone calls.
Yeah, I would say that's one thing. We are, I wouldn't want to say expert, but we're probably close to it in terms of how to do rollover calls and how to get money out, what questions to ask. And I think that's just it, folks. You got to realize this is your money. And at Tony Walker Financial, we completely recognize, and more importantly, we respect that. As Wes said earlier, gosh, we've had people, we haven't kept everybody's account at Tony Walker Financial. I mean, I've done this 38 years. We got right now probably close to 3,000 clients. We realize for various reasons, somebody might want to change, somebody needs to close out accounts. It is your money, and we're going to show you your money when you request it. Now, when we come back, this is going to be interesting because the proof's in the pudding, Wes. And I want, when you come back, I want you to explain how we do what's called cash raises, distributions, why this is a huge part of our money management process that most advisors I don't think work this hard at, and that is to make sure that we have your money in a position to get that money to you lickety-split. I'm Tony Walker. You're listening to The Worry-Free Retirement. I'm with my favorite nephew, Wes Walker. We'll be right back. Wondering how annuity peddlers can offer bonuses of up to 15 or even 20% on your money? Well, as the old saying goes, if it sounds too good to be true, there's always a catch. Here's my thoughts. Don't get stuck in the wrong annuity. Get a free second opinion from one of the leading writers of annuities in the country, Tony Walker Financial. To get started, simply log on to TonyWalkerFinancial.com or call 877-499-WALK.
It's my money and I need it now. It's my money and I need it now.
It's my money and I need it now.
It's my money and I need it now.
Oh yeah, a little J.G. Wentworth commercial there. Man, that's a power. You know me and jingles. I love jingles. That's a pretty powerful jingle.
That's impressive. That was able to hang with me this long. I remember seeing that commercial on the episodes of Maury I'd watched when I was sick at school 10 years ago. So yeah, I was able to hang on. If you have a structured settlement and you need cash now, call J.G. Wentworth.
Oh, you know who else loves this? And he's your age. My son, Anthony. He doesn't even keep up with finance. He goes, "You ever heard of J.G. Wentworth, Dad?" I said, "What are you talking about?" He goes, "They have a great jingle." But so, hey, anybody that worked for J.G. Wentworth or the guy that created that ad, kudos to you. And what I love about it, if you're just now joining us, I am Tony Walker with the Worry-Free Retirement, is this whole idea of I need my money now. Isn't that kind of what they're saying? Give me my money. And that's kind of the way with savers and retirement. Folks, what you've got to realize out there, you got a dogfight on your hands when you get into the financial world and you start rolling all these 401ks over, or maybe you don't roll them over, and all of a sudden the custodian, your current 401k provider, wants you to leave it there. Because this all falls under something that's a very economic, sound principle that we all live by in the financial world, and it's called other people's money. And once you figure out that everybody existing, including Tony Walker Financial, requires other people's money to make money so they can stay in business, talking about the financial world, you got to realize that you are kind of on your own. That most of these advisors, most of these financial institutions are not really that crazy about you spending and enjoying this money. And I think that's where we're different, Wes. I know you've been with me now a couple of years now. Mm-hmm. Okay. I mean, you mentioned it earlier. I think you noticed right away, if somebody says, "I want my money," we get it to them, don't we?
Lickety-split.
Lickety-split. So what I thought we would do here, just because I want to show the proofs in the pudding. Now, keep in mind, we have over 2,000 accounts with Charles Schwab. Incidentally, I'm going to have Mandy Houchins on next week to talk about this very subject, how we get money back to our clients through the annuities. But now we're talking about the Charles Schwab platform that you're a little more familiar with, Wes, and just how we encourage people to use their money if they need it, and how we are very, very happy to get them their money. And, by the way, no transaction fees in almost all cases, right?
Exactly.
That's really cool. People think, well, how much is it going to cost me to get my money out of this Schwab account? Nothing, other than the taxes, but yeah. So what I thought I would do, I had our own Shannon Ross. By the way, Shannon Ross, you know her favorite word, don't you?
Humdinger.
Here's a funny about that humdinger thing. I kid Shannon. She sent me a picture. They were out in Colorado last week. There's a store out there called Humdingers.
Oh, that's too perfect.
Oh, man.
She didn't plan that out before she went on the trip just to visit and get the picture with it?
Yeah, she tried to write it off. She better not try to write off that trip on it.
Yeah.
But okay, so what is a humdinger? A humdinger to me is something that's above and beyond what you expected. So what I want to do is share with you, let's see, Wes, I'm looking at Shannon's notes here. She gave us all these numbers. Well, I'll tell you what, you just start off because it's pretty concise. Kind of go through each line. Even the one-time demand request. Wow, that's just for May. Yeah, read off some of these statistics.
So before I get into this, like you mentioned on the annuities, a lot of times we'll start income on the back end from those. So those might be when people are really getting into retirement and they need that guaranteed lifetime income. A lot of times these distributions from Charles Schwab, for example, these one-time distributions, this might be for the purchase of a car, might be for a vacation. Anytime somebody needs this money, we're here to process these requests. So, for instance, in May, we fulfilled 73 one-time distributions.
That was one time.
One time. That's not recurring distributions or systematic, monthly distributions coming to clients' accounts. Literally, one-time distributions for anything could be the...
And let's walk through that process because a lot of people cannot believe how easy this is. So, Joe Lunchbox maybe needs an extra $20,000 or $30,000 to put down on a car or something.
Sure.
What do they do? Go through that process to contact us.
So rather than calling Charles Schwab, they would call our office directly. So you'll talk with someone that you know and you're familiar with. We'll go over your account balance. We'll tell you how much is in the account, and we'll ask how much you'd like to withdraw. We've already got the taxes withheld set up on your account, so we know how much to withhold in both federal and state taxes. We'll confirm those tax withholding amounts to you, confirm your bank info, and then, if needed, raise cash and process the distribution. Typically, we can get these to you in 2 to 3 business days, so it can be pretty quick.
And you do a lot of those cash raises. I'm sure we'll get to that, but tell people what you mean by raising cash.
Well, let's say you've got an account with $100,000 in it and you'd like to take this distribution of $30,000. Well, the $100,000, assuming it's fully invested, would be in stocks, bonds, and mutual funds, so not cash. You'd have to sell your positions in those holdings to raise the cash for the distribution. So in this instance, we would sell $30,000 worth of securities and then process the money to come to your bank again in 2 to 3 business days.
And the good thing, you say they, we, it's us. We're doing all the work. So when they, all they got to do is it's just a phone call,
It's
right?
a phone call.
We'll take care of everything. I mean, it's an incredible service, folks. I mean, a lot of you are complaining you call these 1-800 numbers, you can't even get anybody on the line, much less help you process all this. Okay, go on and read some other statistics and make sure and clarify that. I think these are just in the month of May, and then we've got some year-to-date, but go ahead.
Sure. So again, May only, the one-time distribution, 73. Total distributions, including what we call systematic distributions. So this is where a consistent check is sent to, and again, it's just directly deposited into someone's bank account. But the direct deposit sent every month, we had 435 total distributions, including those systematic and one-time distributions.
Ooh, man.
So year-to-date amount of money we actually deposited, direct deposit to clients, was about $10.6 million. And in the month of May alone, about $1.4 million.
That is unbelievable. That's awesome. And then also, well, there's a little bit extra where people can get a money via check. I noticed that line. Why don't you read that one there right below it? Do you see that?
Yeah, for whatever reason. If you like receiving a check in the mail, we can do that as well. Year to date, we've sent about $500,000 through checks, and then in the month of May, about $143,000.
And then a lot of our money does go to Schwab first. I'll read this off because, again, next week we'll talk about the annuities and the power of what we call our split IRA concept. At Couples, it's a unique and ingenious way we do this because we provide this high level of service overseeing both the investment arm through Charles Schwab and the annuity arm through various insurance companies we use for various annuities. But I think this is an interesting statistic that Shannon sent, and I'd say this is a humdinger. We actually had $25 million through May this year transferred over to our fixed annuities for all that mailbox money and all that safety. That's pretty impressive. And in May alone, $7.4 million went from Schwab to the annuities. And you might say, Tony, why are you putting all that money in annuities? Well, folks, as we record this show on June 13th, 2022, believe me, I'd say, Wes, people that have that much money going to annuities are probably pretty tickled right now to have some money in annuities. Wouldn't you agree?
I'd have to agree. It's been a safe haven for a lot of folks, especially when you're approaching retirement. If you're going to get into the annuity world, you've really got to find somebody who's experienced with these products. And if you set it up the right way, annuities provide an awesome benefit of having guaranteed income or just safe accumulation and not having to worry about taking all this market risk.
That's right. And then I would even say a lot of you listening to this show, now, again, we can't hold to these rates that I'm getting ready to give you because, again, we're recording on June 13th. Aaron, approximately when will this show be on? Okay, so by the time you listen to this show, July 28th, these rates will change. But as an example, I think we've got several $1 million pending right now, Wes, where we're taking some of these Schwab monies. We've liquidated into a lot of cash positions because of all this volatility. And people are moving into what's called a 3-year fixed interest annuity. And again, as we record this show, that's guaranteed at 3.35%. Plus, we can send them the interest, and there's no fees.
And it's tax deferred, too. That's another thing that's interesting about, they're called multi-year guaranteed annuities, MIGAs or fixed annuities. All those terms are kind of synonymous, but rather than a CD where you're taxed annually, it's deferred taxes because it is an annuity. So another cool point on the MIGAs there.
Yeah. So it's just, we've got so many options, folks. So I know these are tumultuous times. Even our Schwab platform, I mean, we admit it, it's been a rough go here lately. But that's why we don't recommend you put 100% of your money in annuities, and we certainly don't recommend you put 100% of your money in Charles Schwab. You need a balance of both, and that's where we can help at Tony Walker Financial. So if you're sitting there saying, Tony, I don't really have anybody that's watching over all this closely and understands both the stock market and the annuities, well, folks, that's our world. So if you're sitting there right now and you feel like it isn't your money, that the financial world is kind of holding on to it and throwing you a bone every once in a while, you don't have to live that way. Why don't you do this? To learn more about Tony Walker Financial, just go on to TonyWalkerFinancial.com. Click on that Let's Get Started button, TonyWalkerFinancial.com. Or what you can do, if the internet's not convenient, just give us a call at 877-499-9255. That's 877-499-WALK. Well, Wes mentioned something earlier about safe haven. And with all the uncertainty out there, last week on the show we covered a blip on a investment show where somebody basically said there is no safe haven. And we would beg to differ on that. So if you're that person riding down the road right now and you feel like you don't know of any safe havens to get a decent return on your money, well, stay tuned. Tony Walker with Wes Walker, we're going to be sharing with you exactly what you can do to safeguard more of that money. I'm Tony Walker. We'll be right back. Getting ready to roll over your 401k to an advisor you barely know? Are they just going to invest your money, or do they actually have experience in retirement planning? Well, here's my advice. Don't leave your retirement to chance. Get a written game plan from an experienced retirement planning firm that has created more than 5,000 written game plans. To get started, simply log on to TonyWalkerFinancial.com and click on that Let's Get Started button.
It's my money and I need it now. It's my money and I need it now.
It's my money and I need it now.
It's my money and I need it now.
Welcome back to the Worry-Free Retirement. And the topic is, folks, this is your money and you ought to spend it when, if, how, whatever you want. And don't you dare let the financial world make you feel guilty over wanting to use and enjoy your money before it's too late. Wes, we were just talking a little bit about the idea. I had a client that became a client recently, and he said, Tony, that thing you showed on TV, and then I showed it to him in person on the whiteboard when we met recently, called the 3 halves of life, and this idea that as you get into what I call the second half, which is generally over 70 years of age, and how I'm probably going to spend less and less money, he told me, he said, I've never thought about that. And I think what had happened, Wes, he was so worried about having all this huge amount of money he's been taught to have in his 80s, which is kind of crazy when you think about it, that he was afraid to spend it. So when he saw that, hey, let's enjoy the money now, and when you get on the back end of this thing called life, more than likely, barring some sort of medical catastrophe, you're not going to spend that much money. So again, let's provide proof in the pudding. Talk about, because you're so involved in the distributions from the Schwab platform, the different people and the ages who tend to take the most money out.
Just to make it simple, I don't get too many distribution requests from an 80-year-old wanting to buy a new boat. They just don't come in very often. Seriously, though, a majority of the distribution requests that I process are coming from people in their, maybe early to mid-60s. They're buying new cars, or they're going to see their grandkids, or going on vacation, or whatever they want to do, which is awesome. That's what we endorse. But just don't see a lot of distribution requests one-time distribution requests as you get into these, kind of later years, or what we call the second half of life.
So that should be reassuring as we're fighting with inflation in June of 2022 and gas prices. What is it, $28 a gallon now? What's it up to now? I don't know, it's just crazy.
I stopped looking.
I know, you just kind of pump it and go on. I know I drive a lot, Wes. You know that. You drive quite a bit too, but I have to fill up twice a week. Mm-hmm. And I'm right up $200 a week almost. It's a lot of money for gas, even for me. It's like, whoo. But you got to do what you got to do. Okay, then the next thing this gentleman said, so he became a client. He said, I love your philosophy, man. This is awesome. He'd read the book, Live Well, Die Broke. Incidentally, folks, if you haven't read Live Well, Die Broke, I think it's a game changer too. If you're thinking about working with an advisor, what I've learned in doing this over 38 years, you want to find an advisor, whoever it is, it doesn't have to be us, but whoever you choose, has a very similar philosophy about life and money that you do. Why in the world? That'd be like dating somebody, Wes, and they're totally opposite of you. They don't like the same things. They don't have the same interests. That'd be a disaster, wouldn't it?
It'd be a mess, yeah.
But people do that with advisors sometimes. They don't have the same risk tolerance. They don't have the same agreement on products. They don't spend money the same way. Folks, you've got to hook your wagon to an advisor whom thinks like you do. So I would encourage you to get a copy of that book at Amazon.com or Barnes & Noble. It's called Live Well, Die Broke. It was a bestseller on Amazon. I wrote the book to try to help people understand my philosophy of use and enjoy this money before it's too late. We'll show you how to make sure you don't run out of money. And guess what, folks? In the end, you can't take this stuff with you because we do, all in the end, die broke. All right, so the final thing Ken said, my new client, and I love this, he said, Tony, all right, he's tired of Wall Street. He's tired of losing money. He'd had a bunch of money in Wall Street. He's got a bunch of money sitting in the bank. I showed him all these annuities, fixed interest, fixed index, no risk. He said, this is awesome. He said, but Tony, on your assessment, you're only showing roughly 70% going to these annuities. I want to put all of it there. And I said, Ken, unfortunately, as a fiduciary, I can't do that. We can't put 100% of your money there. We could get you some one-year CDs and stuff. But now that you've been around for a couple of years, Wes, and now you're seeing the difference between savers and investors, why do you think that Wall Street is so against these annuity products, and when our clients get a hold of them, really understand them, they love them? What's the disconnect?
Well, the problem with Wall Street not wanting to sell annuities is because you can't, in most cases, charge a recurring fee on them. People bash commissions, but it is a one-time commission that you make on the sale of an annuity. Wall Street really likes to have things, assets under management, that you can charge recurring fees on every year. And if you have an annuity contract, it's essentially a one-time commission paid to the agent, and there's no further commissions paid after that.
And then a caveat to that, obviously, if they're going to pay me or anybody a commission, there are surrender charges. So before you leap into an annuity, make sure you find out the surrender charges. But all things being equal, I think you're right, Wes. In fact, there's a pretty well-known firm that always advertises on TV, will go nameless. They constantly are acting as if they always say, we don't charge commissionable products. And I said, well, that's fine. You can choose not to do that. How do you get paid? They don't really tell you how they get paid. But yeah, there's nothing inherently wrong, folks, with commissions. So back to that, Wes. Again, why do you think they have such a problem with commissions? Give an example of what that might be. Let's take a $200,000 account, a commission versus a fee. What are they going to make if they charge fees?
Well, if they're a typical money manager, 1.5% is kind of customary. So on a $200,000 account, that's $3,000 in management fees per year. If you think about that, and they're able to hold your account for 10 years, that's $30,000 that they made on you rather than a one-time commission. We'll just say the commission on the annuity contract is 5%. That agent who wrote the deal maybe did $10,000 in commission that year.
Yeah.
Would you rather have a one-time payment of $10,000 or an income stream of $30,000 over 10 years? Just
from their standpoint.
From their standpoint, yeah, they would rather have the recurring revenue, and I think that's why they typically don't like these products.
So folks, if you're sitting there going, yeah, this is all starting to make sense, and now I'm kind of understanding why nobody wants to show me my money. Well, if you're tired of that game, folks, give us an opportunity to at least show you how we work at TonyWalkerFinancial.com. It's easy to get started. Just log on to TonyWalkerFinancial.com. Click on that Let's Get Started. We can set up a no cost, no obligation, no fee, what's called a free 10-minute fiduciary phone call where we will talk with you about your situation. And absolutely, if it warrants, we'll meet with you in person at either our Bowling Green, Louisville, or Lexington, Kentucky offices. TonyWalkerFinancial.com, or give us a call at 877-499-5792. 877-499-9255. That's 877-499-WALK. Well, we've enjoyed being with you. Wes, thanks for your time.
Thanks for having me.
You are so welcome. Between now and next week, if all else fails, you remember, folks, you be worry-free.